Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everybody, checking in on the dollar and gold. So we had that rejection from 103.60 and it's now multiple rejections, and we're continuing to consolidate, and the bears are in control of the short term because we did break this low of support at 102.58. So it is a break of that level. So we're looking down here at 102.39, and the big one that I keep pointing out, 101.90, 101.91. So let's zoom out to the daily and see why that's such an important level short term. Look at that resistance, 103.60. Very clear that we're rejecting from that level. If we lose 101.91, it will be a break of the daily higher low pattern. We'll have clear rejections from multiple tops of resistance. Then the next support we're looking down at is 173. So 101.91 key support level in the short term going forward. And if we lose that level, another leg to the downside is likely coming, and that would be an ideal scenario for the gold bulls. Look at this resistance, 1166. This is the hourly chart. 1, 2, 3, 4, 5, almost 6, 7, 8, 9 rejections in 11 candlesticks today. Very clear resistance. That's the level to get above and turn into support, 1166. Support is down here at 1160.61 and then down to 1156.05. So we're still maintaining higher lows, but very clearly the bulls need to get over that resistance level to continue with the progress we've been seeing here on this bounce. The daily time frame still has that 10-day moving average. It's still ascending. Higher lows and higher highs. This is a really good sign for the bulls. Look at the volume. Increase in bull volume ever since the bounce started. This is an ideal scenario for the bulls. We just have to keep in mind that we are nowhere near out of the woods. Looking at 1180 as the next major resistance after 1166, after multiple tops in the 1180 range on the previous bounce attempt back here in early December. And the gold bulls are holding up well. So let's check in on those gold bulls, and I'm not looking at the bears because we are all focused on the bulls in the short term. NUGT, higher lows intact. We've seen a higher low every single day of this bounce. So that's an important trend for the bulls to continue with. And a low of 836, bulls ideally want to hold that level. And we're looking to break the high of this bounce, 926 for the bulls. Looking at JNUG, bulls also bought the dip here. Low of 642 trying to hold. Resistance up at 720. So the bulls are still looking good. And let's look at GDX and GDXJ. And a lot of people say, why do you chart JNUG and NUGT? And the simple answer is because that's what people want to see. But if I were going to be making trading decisions, I would not be using moving averages or levels on these 3 times leveraged ETFs because they are subject to time decay. So I would be looking at the Vectors gold miners here, GDX. We can see the 200-week resistance rejected the price last week for GDX, and we're testing that level again, 2210. Close above that level, and we're looking for a bull TCG cross of these exponential moving averages and a bull MACD cross. So GDX, got GDXJ. Also looking to break the high of last week, 34.30. We're right there. Need that momentum, and also on the verge of a bull TCG cross. So keeping an eye on these bull miners, everything is still going according to plan on this oversold bounce. And ideally, maintaining the higher low pattern for the rest of the week would show lots of strength going forward. And we need that 1166 resistance as support for the gold bulls. So we'll see how it plays out tomorrow. We'll check back in. If we reject from 1166 and can't get over that level, and if we pull back and lose support here of 1156, that is going to be of concern to the bulls on this bounce. So pretty important that this support were to hold, and we'll see how this consolidation goes overnight. Thanks for watching. See you tomorrow.